trillion opportunity or not? I hope we have a few more insights on that. The next topic we are going to put our attention to is crypto investment as an alternative to traditional investment. In this digital age, should everybody invest in digital assets? Is this just the new proper thing to do? And has it become maybe even the better investment class than traditional assets? Our upcoming panel will discuss these questions and other ones. On the panel, we will have a bit of a compromised version, so it'll be a more intense and focused discussion between Lucas Friss, Head of Business Development at Cumberland, a DRW company, one of the largest Bitcoin trading desks and leading liquidity providers in cryptocurrencies. Also, we will be joined by Federman, founder and CEO of Federman Capital, an investment firm focused on blockchain technology and crypto assets. And our moderator of the day will be, of course, Kleij, so we get to indulge in a conversation hosted by him. The other two panelists, Plan and Rusev, who's hopefully somewhere here. If you are here, please do get mic'd up. And Patrick Martin from ARC Advisors, it'd be pleasure as well if you're in this room to have you on the panel. Otherwise, we're going to start with Lucas Friss, Thomas Friedman, and Kleij for hosting. Thank you.
Okay, I'm also going to move this. I do weddings, I do bar mitzvahs. Thank you. Hi guys, welcome. Thank you very much. So, today we're going to, these are very strange chairs, aren't they? So, today we're going to ask some questions about crypto assets. Are they suitable for personal investment, family investments, institutional? How do people go about it? In the preparation for this, we had actually too many questions to figure out. And the guys said, look, let's just focus on one or two things that really matter. So first I'm going to ask you to each introduce yourself, tell us what you do as a firm, and then tell us about one thing that you think about a lot or that you're worried about in this industry that we should address. Let's start with Lucas.
Sure, thanks. My name is Lucas Friss. I'm the Head of Business Development for the European region for Cumberland. Cumberland is the leading global liquidity provider in cryptocurrency. We are the largest, if not one of the largest, market makers globally for cryptocurrency. Typically, we are facing institutional clients, whether they be crypto hedge funds, traditional hedge funds, family offices, etc. But we also trade with a very wide swath of the entire crypto ecosystem, so payment processors, service providers, miners, etc. We're a subsidiary of DRW. DRW is one of the largest proprietary trading firms globally. We have about 1,000 people spread across 9 offices. Right now in crypto, we're trading 24/7 and about 30 to 40 different crypto assets on a daily basis, and we trade in about 40 different countries as well.
Fantastic. Very much. That keeps you busy. Thomas, tell us about you. What are you up to?
Sure. Hi everyone. My name is Thomas Federman. I'm the CEO of Federman Capital. We are a crypto hedge fund investing all across the asset class, from taking positions in well-established cryptocurrencies all the way to participating in private sales and investing in companies even before they launch their token. My background is 15 years of experience in tech, both at startups and at major tech companies. Most recently, I led product strategy and global go-to-market at Facebook, and driving several major ad products. Out of the London office here, I'm based in London. I've also spent some time in Silicon Valley as an entrepreneur, and also went to Stanford as a school. Super passionate about the space, and that's why started obviously the fund. So I'm going to be here most of the day and happy to talk with people also afterwards.
I'm always excited to meet somebody after this last year who has invested directly in ICOs, who still says, I'm super passionate about the space. So I'd like to ask a bit about that. Are you still currently looking at and participating in some token sales? If so, what are you looking for?
Yeah, that's a great question. So I think, kind of the recent developments are very healthy for the ecosystem, right? Like the craziness that we saw at the beginning of the year and kind of late last year, where you saw a lot of these, public ICOs where retail investors just got in, oftentimes without realizing fully the risks involved, is pretty crazy. And so I think that what we see right now, where the public markets ICO is kind of almost dead, and as an early stage company, you got to go to investors first, is actually very healthy, because that creates filters, right? And it's much more difficult to kind of create scams and pass that filter before you get to retail investors. And so I actually like that it's now kind of more similar to the traditional VC route that we're used to. And also it creates opportunities where the ones who actually make these really difficult, pass through this difficult hurdle. There's some really exciting kind of opportunities and projects that are being developed. So I think hopefully moving forward we will see less scams, we will see more transparency, and we will see really exciting opportunities.
I mean, that is fantastic news for all the ICO pitchers that are hoping to get some feedback from you over the course of today. So that's actually very encouraging, but it also raises so many more questions that I'd like to cover. But actually, Lucas, can I chat with you a little bit about the other side of the business? In particular, the OTC business. Could you, there are some investors here that are quite new to the space. Could you describe what the OTC business does?
Sure. So the Cumberland we're focused on is primarily market making in the OTC space for crypto assets. Generally, what this means is providing liquidity on a very large scale to institutions who look to access liquidity in crypto, but for a wide variety of reasons cannot. So the market's very fragmented and bifurcated to a point where not only are the markets not easy to access, but they're also not very liquid. And so when somebody's looking to put on a meaningful position in crypto, it's often very difficult to source that liquidity and do so in a way that is secure and that is palatable from a counterparty risk perspective. And so while what we're focused on is kind of facilitating that liquidity, as a trusted counterparty in the space, and that's what we do.
So, but you act as a principal.
Correct. So we trade on a principal basis. That means we're trading for our own account. We do not broker any trades. It's not agency trading. We trade bilaterally with various counterparties as a counterparty ourselves.
So if I was an LP and investing in your fund, is that right? So you're totally principals, your own capital?
Yeah, it's all of our own capital.
Okay, so the next question is, you do this because you seek to hold some of these kinds of assets for capital gain reasons. Is that right? So you're buying ETH and BTC in the market for fiat?
Sure. So as a market maker, we are on both sides of the market, buying and selling. Basically, whenever somebody comes to us to source liquidity, we give them a two-way price, and they're able to execute on that price. We settle within 24 hours, and that's kind of how our business operates.
Would you mind just, because this is the topic that's gone on, would you mind describing the process that happens, including the custody challenges? How do you address those?
Sure. So as a principal trader, we also custody in the assets. We don't have any clients. So the custody aspect is something that our counterparties, they have to figure out themselves, and that's a large barrier to entry for a lot of the institutional counterparties that are looking to get involved. A lot of the more traditional hedge funds, family offices, etc., they don't have the expertise from a technical standpoint or the operational infrastructure to be able to handle custodying and securing these assets. So oftentimes they will look to a third-party provider. Some people will self-custody. It kind of just depends on the expertise and the infrastructure of that particular counterparty. But there's no doubt that, in my mind, the number one barrier for traditional institutions entering the space is 100% custody, because the regulatory aspect is a close second, but there are people who are willing to take that regulatory risk. There are not people who are willing to take that risk of securing and custodying these assets when they have no idea how to actually do that.
And that's so interesting, because coupled with that must be legal aspects of a contract. And we all understand from the old world of finance how escrow works for fiat, for share certificates. You've got DTCC, you've got those great institutions that you can kind of rely on. But this is a whole new field. And so, are there, for example, legal advisors who really understand the space and can help de-risk that counterparty risk part of it. Tom, do you?
Yeah, there's some really good actually legal advisors in this space, people who know the space. And
You don't end up paying their fees to teach them.
I mean, but that's my point. So there's some really good, legal advisors in the space, but the problem is there's no regulatory clarity. And so no matter how good you are, right, if there's no regulatory clarity, I mean, you can just advise basically on how to minimize risk, but there's no, track record of decades of doing that. And so unfortunately there is some kind of, uncertainty.
There's a learning curve.
Yeah.
Yes. So can we talk a little bit about liquidity? I mean, this is what people talk about as one of the potential attractions of this type of asset class. Can we talk about liquidity? Is that one of the things that appeals to you when you're considering an investment in an asset?
Absolutely. I mean, for me specifically, I had opportunities to go into VC investing, both when I was in Silicon Valley and also more recently. And I never wanted to do that because I think the model is broken. And I can probably spend 30 minutes just talking about that, but in principle, right, the idea of, the life cycle of the fund being, anywhere between 8 to 10 to 12 years, and kind of riding these checks and then hoping for the best never made sense to me, right? I've, spent my career in tech, and I can tell you, if two people come to me, right, and they work on a product out of a garage, and they have a prototype, and maybe a few, customers, is this going to take off or not? I have no idea, right? Because so many things can happen down the road, right? Maybe the two founders kind of fall out a year from now, right? Maybe 2 years from now they're successful and Google enters the space and just touches them. And so the idea of having liquidity and kind of being able to assess your portfolio every single day and act based on, the latest developments is a game changer, I think, in many ways. And
how should a founder think about this? Think about it from my point of view. I won't tell you how many years ago, but I raised a total of $43 million from 7 investors for my company. But then, as my wife likes to call it, it was my 10-year overnight success. Right? So this is what happens. These things take time.
Yeah.
If I thought there was the potential for volatility and trading amongst my shareholders at the riskiest, earliest stage, when actually a little bit of stability would have been helpful, it might throw some dynamics into that relationship that I don't want. Do founders think about this these days?
I think they definitely think about that, and that's why it's so key to kind of choose the right partners, right? If you're going through the private pre-sale route, and you have the opportunity to kind of choose who you want to invest in your company, then you probably want to choose, partners that are, that are kind of married to that, see your vision and are married into the long-term vision and can see how this thing can really take off, rather than kind of, algo shops that are looking to trade on the volatility. That's probably not a very good
Probably
fit.
not. But actually, on the other hand, if you came to me and you said, actually, I want this block of your tokens, but I want the right to bring in other investors because it brings more liquidity and interest to your business. That's a great pitch. That I would listen to that. Yeah. It's interesting that these messages are so new, and thinking about how they impact us is an interesting thing. Actually, Lucas, I was going to ask you: do the pundits and research firms know enough about this to help you with some of your investing decisions?
I think to an extent. I mean, there definitely is some expertise in the industry that is better than other expertise, but the reality is that we are so early in this industry that there are hardly any experts, if any. That said, I think that's one of the trends that we think is going to continue, is a much more nuanced and developed understanding of both the underlying technology and the crypto assets themselves. In the market today, we see the very tight correlations between coins that, in reality, when you look at their technological specifications or how they're meant to function, they really logically should not have the level of correlation they have today. Yeah. We think as the market develops, people get a more nuanced understanding of what they're investing in. I think these correlations will start to break down, and that's kind of a trend that we're starting to see, but it's still going to take some time.
Yeah, I think that the more kind of trading pairs we see, right, and kind of as you'll be able to kind of invest directly in the asset that you're interested in, rather than go through buying Bitcoin or Ethereum and from there kind of converting, then that correlation is also good.
Exactly, and also another trend that we're seeing as well is an increased demand for kind of more exotic crypto pairs. So, for example, people rebalancing their portfolios or maybe going from a more liquid coin into a less liquid coin. Right now at Cumberland, we're able to quote in over 400 different crypto pairs. And we're seeing kind of the market share of demand for crypto-to-crypto transactions from crypto hedge funds and active traders to increase substantially.
What's the relationship then that you both have with exchanges? Go for it.
Sure. So I mean, we are focused on the OTC market making space. We also make markets electronically on exchanges globally as well. I think that from an investor's perspective, it can be a bit tricky. I mean, there's hundreds of crypto exchanges out there. Obviously, some have volume, some have legitimacy. It's kind of it's an interesting prospect of kind of weighing your counterparty risk when you're looking to trade with various exchanges. And so, that's kind of what our expertise is, that we have these connections and these relationships, and we can access this global liquidity pool that others either might not be comfortable from a risk perspective accessing, or they just don't have the operational bandwidth to onboard with these dozens of exchanges.
I mean, with the knowledge that you have, an organization like yours is capable of arbing across a whole bunch of exchanges. Do you do exchange arbitrage work?
Yeah, I mean, we're always looking at exchanges globally for trading opportunities. We trade on a principal basis, so aside from the market making, we are always looking for trading opportunities, but our focus is really on providing liquidity, whether that be OTC or electronically.
Johnny, do you think there's a shakeout coming?
More than what we've already seen.
Yeah. Well, I'm thinking about the exchanges. Most of the theft risk and mistakes are happening at the exchange.
So I gotta admit that's one of the, I wouldn't say mysteries, but kind of one of the things we're most passionate about, and that is, a big part of our investment thesis is actually related to decentralized exchanges.
Right. Actually, share with you what is the difference.
Yeah.
What is a decentralized exchange?
Right, so the decentralized exchange basically acts as a peer-to-peer marketplace where you're able to kind of trade directly with, someone else, whether it's, a market maker or a different participant. But the reason I like it so much is basically there's no counterparty risk if you use the right tools, right? Because, the way it works, right, the tools that we use, basically it's built on top of atomic swaps, right? Which means I trade directly from, we trade directly from our wallets and kind of exchange the assets with the, with the different party. And as a result, right, either the transaction kind of succeeds, and you get the asset that you converted, or it doesn't, and you keep the asset. But at no time do you actually move part of your asset to a different kind of account and are left
Who's responsible for KYC?
Well, in this case, it's a good question, and right now we're starting to see kind of developments in this space to allow also KYC. There's no KYC for some of them.
Doesn't that mean that a massive danger zone in the industry?
It does, which is why you have OTC that you can use as well. I think the big risk though is centralized exchanges and kind of keeping your funds in a centralized exchange. And even kind of, moving some of your assets there, making the trade, and then you're kind of relying on them to secure your, your assets. And we've seen so many examples, right? Like basically every other day where there's hacking into a different exchange. I have no idea what the security protocol is for, any given centralized exchange, and I'm not willing to take that risk. Certainly, I'm not willing to take that risk with, capital that will manage.
But that's part of your business, right? Is helping reduce that risk.
Yes.
That's right.
Exactly, and from just commenting on the decentralized exchanges, I think that it's a very interesting idea. I think that if you look at the numbers, the trends of volume for decentralized exchanges relative to volumes globally, it is trending up. It is a very small part of the market, but as you mentioned rightly, the KYC aspect of that is a big question mark. So I think that on the retail side, the decentralized exchanges are accessible and usable, but from an institutional perspective, until somebody solves that KYC issue for the decentralized exchanges, it's going to be difficult to draw a lot of liquidity and volume on an institutional level.
See, that's another wonderful opportunity in the space.
We're already starting to see those solutions in that space. For instance, a company called AirSwap, being based out of, you're probably familiar with them, based out of New York, built now a decentralized OTC trading desk, combined with a KYC partner, which is pretty compelling.
I wanted to chat about AML and provenance of crypto when conducting OTC trades. Because, this is quite new for me, so I'm learning as well, but as I understand, the challenge is that some people engaging in OTC trading want to buy quite large quantities of things like BTC, but they want proof of first generation ownership of Bitcoin, i.e. they want to buy from the miners because they can be relatively certain of provenance, and that it's a KYC question, isn't it, really, or beneficial owner question, in that the crypto that they're buying hasn't been tumbled, it hasn't been part of a ransomware bit. How does the industry currently, how do you deal with this currently? And what's the outlook for that?
Sure, I think it's a really tricky question. There are a number of service providers in the industry now who are specifically their purpose is to KYC AML the crypto assets themselves,
including profiling, right?
I'm sorry,
including profiling, which is
sure, yeah, and so they're able to to a reasonable ability. Understand where these coins have come from, if they've been used for anything illicit. That said, I think it's really tricky because it's kind of a slippery slope. I mean, fungibility questions come to mind when you think about how people are going to weigh, what a newly mined coin is going to look like versus something that's not newly mined. One of the things that we're known for in the past is having one-in auction from the U.S. government, Bitcoins that were put on auction from, various things. So in that situation, it was the U.S. government kind of blessing, these coins that were used for illicit means, but now putting them back out into the market. So I think there's a number of ways to look at it. I think that no one really has their head wrapped around that quite yet. I think it is an interesting question, but it is kind of a slippery slope. That said, from our perspective, we use a number of service providers as well as internal processes to look at the coins that we are receiving and people that we're trading with in their wallets, and we always are quite careful from a KYC and ML perspective on both the fiat side and the crypto side.
Tommy, do you have a comment on that?
No, I think I agree with everything you said. I think I would distinguish between the fiat and the crypto side of the business. Obviously, if you're doing crypto-to-crypto trading, the KYCs, I think the process is slightly different than getting into crypto and kind of converting your fiat. Nothing really to add other than that.
You made me think of when you mentioned like the US Rangers legitimizing tokens by taking them from the criminals and then selling them, or taking them from legal situations where they and then selling them. I recently had the privilege to interview Tim Draper about his first auction bid for the, I think it was 40,000 BTC that he bought the first time around. He told us that he put in a ridiculously high bid of $648, I think it was, per BTC. He said all his friends in the valley who were into crypto told him he was completely off his head to offer anything like that amount of money for it. And he's kind of pleased with that decision. Do we think that there is a case for, not really that situation, but do we think there is the case for example, super rises in value, when people start to realize, hey, this is true utility? I'm thinking of it, I saw a news item, for example, interviewed Chris Larson from Ripple, and a couple of weeks later we saw an announcement that the potential for the US government to get behind Ripple to balance some of the Chinese mining overweight focus on BTC. That could trigger some serious interesting gains in things like that, that type of thing, which have true utility. Will we see some things like this? And in which case, which ones? Everybody here wants to know.
I think yes, absolutely. In many ways, I think this is kind of reminiscent of the early 90s, right? If we compare it to the internet era, where I think of the big kind of tech companies that are going to emerge in the next 10, 20 years, right? I think a lot of them are going to be based on blockchain technology. And so if you think about the next Amazon, the next Google, the next Facebook, I think a lot of them are going to be based on that technology, and there's going to be significant opportunity.
Which ones? Just between us.
That said, I think if you look at assets like Bitcoin, that's worth over $100 billion at this point, obviously it's going to be more difficult to 10x or 100x from this point. So, our thesis is also kind of focused on finding the next Ethereum and Bitcoin, and I think they already existed, rather than kind of just betting on them.
I don't know. I still have family offices who say to me, Eric, I'm buying these for our grandchildren. We are buying BTC because, as a store of value, they feel it's the closest thing to digital gold. Give me a good shake there, but tell me why. Actually, what do you think? Tell me what you think. Is that crazy?
Sorry, could you repeat that?
Family offices buying large volumes of BTC just to hodl them for generations. They think these are the things that their families of the future are going to unlock as digital gold.
Sure. I mean, I think from an economic standpoint, and the deflationary schedule of Bitcoin, I mean, I think that's there's a number of ways to look at an investment thesis in Bitcoin and in any number of other crypto assets. We at Cumberland are not in the position to advise people of crypto asset investment. We are just here as a liquidity provider, and that's kind of what our focus is.
So actually, that type of client that seeks to do that is exactly the sort of person that you want to meet, isn't it?
Sure, exactly. And I think family offices in particular are kind of interesting because the really wide amount of approaches that they can take. So, they can invest in more of a VC type of facility, an equity investment. They can invest directly in the coins. They can invest in a fund. They can, there's a number of ways to get exposure to crypto. And I think that it's kind of an interesting, segment of the market because they don't necessarily have a investment mandate like a hedge fund. They have a lot more regulatory flexibility as they're only, dealing with their own assets. So I mean, it's kind of an interesting portion of the market because they have a really wide range of ways that they can get exposed to this asset class.
In the 3 minutes that we have left, I'm going to open it up to the audience for any questions. If you do have any questions, please shoot your hand up in the air, wave, gesticulate at me in a polite way. I can't see exactly well because there's a lot of bright lights shining on my face. Can you see that? Oh, thank you. Right in the center there, and if we have a microphone ninja, please race there over and give the microphone. If not, would you mind standing, use your diaphragm, project and tell us all who you are and what your lovely question is. Woo! Look at that.
As always.
Thank you.
I got a question about KYC. What do you think is enough to do chain analysis and KYC? How far can you go back from the original transfer? Because we don't KYC an email the way they try to do in crypto. Danske Bank in Estonia and all these money laundering places that just took place would already be able to capture it. So when is enough in the crypto space to satisfy the regulators on the coins?
I'll take that. I mean, I think that it's a really tricky question because, as you said, what satisfies the regulators? I think that in the vast majority of cases, no one actually knows. And so, the question becomes how you operate a business when you don't know what the rules of engagement are. Us being who we are, we're a subsidiary of GRW who's been in traditional financial markets for 2.5 decades. We treat this market like it is any other market. So we go above and beyond with KYC AML. We take it very seriously. It's something that is, first and foremost in our process. And I think that, if people look at it like they would look at any other market, I think that, if they do all that they can to prevent, AML issues, or money laundering issues, then I think that is going to satisfy the regulator until they come up and say, this is now what is going to satisfy us. You need to get to this level. But right now, there's no answer to that question.
A question over there, but I will say, by the way, I've just had a nod from the side that the next speaker will answer that question. So hang on for that one. But we'll have this one as well, please.
Stănescu, Alexandru Stănescu, legal officer of Gym Platform. We are deploying automatically master nodes for customers around the crypto world. And my question is related to this niche in terms of crypto investment called master nodes investment and the fact that they can provide you with passive income. I wanted to get your views on how big the market is for you and the interest in general in the crypto world for master nodes investing.
Interesting. Well, first thing is please give me your business card because I can think of 2 of our companies that could use you. That's a sign. What do you think of the business of master nodes? I mean, it's a real pain for us.
Yeah, it is. Again, I think it's so early right now that it's kind of hard to make a judgment call on that just yet. We're looking closely at it. I think it's super interesting. Obviously, it's a different way, to do these things. Yeah, I don't have a good perspective on it just yet. I think it's a bit early.
I don't have much either, but I will say that, that is definitely an area of investment that people are looking at, as well as, staking and, for example, if you look at Tezos, they're baking, and I think that there is no expertise in how to manage funds in that way, and so I think that, there's space in the market for someone who has that expertise and can manage money for people who are looking to stake, but just don't have the kind of technical expertise or the facility to do so. We will see how that evolves. It's early.
I'm going to call it dead because we're going to try today, strangely, to keep as closely to time as we can. We're only about 7-8 minutes over. Please put your hands together and thank my panel.